Good morning, everybody, and welcome back to the Schwab Coaching Channel. It's time for our Monday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from a beautiful Denver, Colorado today. Pleased to be joined by my buddy, regional investment strategist, Jeffrey Abalos. Good morning, Jeff. How you doing today, bud?
I'm doing great. Glad to be here with you, ready to digest what's happening in the news and take a look ahead. So thank you very much for having me. Good morning to all.
Yeah, we're going to need your insights and expertise, obviously, this morning. Jeff, we're going to talk a little bit about, obviously, what we're all watching and paying very close attention to, the market's moves in the last couple days in the market sessions, at least to the downside, and we're going to talk about that. Also try to gain a little perspective on where the market is and what might be coming on deck here as we go forward. So plenty to cover. We're going to look at a lot of charts, cover some pieces of news with all of you. Thanks for being here this morning, everybody. Definitely can say hi to our friends in the chat. Today we are joined by Michael Fairborn there. He's going to manage things in the Q&A side, answer questions that Jeffrey and I are unable to get to. Please feel free posting in there for the duration of our segment. We'll go about 45 minutes in total as usual. If you're not already doing so, you can follow Mike and me on X, Mike Fairborn CS and Kevin Horner CS. We try to post for you there throughout the week. Maybe some notable charts or data pieces that are important for traders to keep an eye on. Good way to get with us coaches outside of the classes that we host. So we'd love to have your follow there, everybody. All right, let's get to some disclosures, and then we'll dive right on into our conversation. So please remember that our discussions here are exclusively informational and educational. We do not make recommendations nor endorsements for a specific approach to trading the market. We will talk technical analysis here, of course. We're going to look at a lot of charts, but in so doing, please remember technical analysis is merely a piece of the puzzle. We do not encourage you to base decisions exclusively off technical analysis, of course. That means it should be a component perhaps, but not the exclusive decision-making process necessarily. All right, so our agenda will stay the same by and large, everybody. We'll start with the top-down approach. So we're going to look at the major indices, a few of the big industry groups, some sectors on the move today, of course. And we've got some stocks in the news, both on upgrades and downgrades, believe it or not, a little bit more of the normal stuff that we try to get to here for you on Trader Talk. So we're going to do that as well. So let's get right to it, Jeff. Let's talk about the S&P 500 right off the jump here. Now, we've got a pretty red candle there already, Jeff. We see a couple of significant gaps to the downside here over the last week, as you know, and we have fallen through now that level that seemed to be like one of those possible support ledges. The two big ones that I think a lot of traders were calling out was the so-called carry trade bottom we had back in August of 2024. And then there was the one prior to that. And seems like right now, but we're below both of them. So we're kind of in a rough spot, aren't we?
It's a tough go. There's no doubt. Excuse me. There's no doubt about it. You've got a lot of things happening, driving the news. I don't need to mention that to any of the viewers out there. They're well aware of what's going on. But what is it that other folks might be looking at? Well, Kevin, if I could have you for the S&P 500, could you pull it back? Could you draw a Fibonacci retrace for me from the October low? There it is, right on up to that recent peak. And do you plan this stuff? No, absolutely not. Sometimes it just happens and it just works out. But very clearly, easy to see as you're looking at this Fibonacci retrace. This is something that it seems like a lot of traders are paying attention to. We dropped down to that 38.2% level last Thursday. We dropped down to the 50% level last Friday. Now, where are we today? 61.8. Is it going to continue going further? I have no idea, but this is certainly something that a lot of the market technicians are looking at to get an indication of where exactly might we start finding support as we continue dropping ever the more lower. So that's something that's really capturing my attention at this moment. Kevin, what about you?
Yeah, very much the same. And inevitably, I'm brought back to some of my standard cliches as it relates to trading the market. Let's not buy at, we're not trying to bottom tick our entries if we're trying to dabble here. Truth is, many of you were probably sitting on your hands, and no one would fault you for doing just that here, Jeffrey. I mean, obviously, one of the big things we talk about is allowing selling to run its course before deciding to dip your toe on the long side again. I often reference it, Jeff, as a driving on down the road, realizing you missed your turn, and needing to jump into reverse from drive. We never go directly, 45 miles an hour, jam it from drive into reverse. We know better than that. We come to a complete stop, then we put it in reverse, and then we maneuver, right? So don't try, as we say, Jeff, don't try to catch a falling knife here. Look for true indications that selling may have run its course. So, Jeff, inevitably, the next question becomes, where or when do we start feeling that, maybe a short-term bottom is in or a new bottom is noted and done with the selling? How do we start to define that, perhaps?
It's tough. Some folks will say, well, I want to see 1, 2, 3 closes in a row. Give me 3 at a support level, and then I might start to slowly toe dip into a new position. One of the things you got to keep in mind too, and this is going back to what you mentioned just at the very beginning of the show, Kevin, it's very tough to time the market. With that said, some of the worst days of the market are followed by some of the best performing days of the market. And that's why you'll hear folks like Liz Ann Saunders say it's about time in the market, not time in the market. Because if you miss those best 10 days of the year, let's say the S&P makes 9% on average annually, you could be only making 7 or 6%, taking out those top 10 days. So if you're somebody that's saying, hey, I know this is a short-term thing, yes, it's going to sting for quite some time, I'm still going to follow through on my plan. Good for you. Kudos to you for doing that. But Kevin, what might somebody keep an eye on to see where that bottom has happened? Possibly finding a support level that everybody agrees with. You could also look for a big up day. You could say, all right, I'm not going to jump in as this thing is falling lower, but what I might wait for is a nice big green up candle where it looks like maybe we're starting to get through the weeds and this thing is looking a little bit better than it was before. So those are some things that a couple traders might be keeping their eyes on. What about you? What are your thoughts?
Well, obviously, all traders want to know the instant that things shift, right?
Yeah.
And that's really hard to define. If we're gonna define it as we would on a traditional day-to-day market review, as we do here in Trader Talk, the first thing we're going to want to define is the current day as our low, and then we want to see if we can trade through the high of our low day. So if today's our low trade day, the best case scenario for us is trading upward through the high we've made today at around 49.60, and that's just a close above the high of the low day. It's too early to know. We don't know if today's the low day. Perhaps the low day comes tomorrow. That's certainly a possibility. Low day could come later. We don't know if the selling is going to continue with abandon as it has over the last 2 prior sessions. So plenty to watch here. I wanted to give you all some answers to some questions. One of them was, hey, we had a bear flag that has now resolved bearishly. Obviously, that all depends on your view of things, of course. But if we were going to, for example, Jeff, look at the move we made off the high to our original sell down, came to here. So we lost, according to my detail, let me shrink this down so we can read the data in my pop-up there, about 10% to that first move over 17 bars, 630 points. Then we built a bear flag, the cloth portion of which was right through here. And so the question that I think Rita had was, hey, if that's a legit bear flag, what are we looking at in terms of our resolution for that bear flag to the downside? Well, we could just take that line and put it from our fail spot, and it might suggest, Jeff, that we've already exceeded the target for the bear flag, which might have come to around 5,050, 5,060. Now, I bring that up, Jeff, because one of the things I mentioned last week is inevitably traders want to fall to areas of support. But, Jeff, how frequently do we find that the support that you, me, your grandmother, and everyone else's grandmother was looking at, how often does support hold there?
Yeah, really tough to say because what my support is might not be what your support is. That's something that you definitely want to keep in mind as we're looking at the markets. We also want to keep this in mind too, Kevin. Technical analysis generally works really good in what we like to call the white noise area. Not a lot of stuff going on. We're in between earnings announcements. This is a tough time to make a decision. Let's look to mass psychology to help us identify where support or resistance or some possible entry levels might be. When you have a very news-driven cycle, which is what we're going through right now, you could do years worth of technical analysis. One announcement blows out all of that work in a single moment. So what are you keeping your eyes on? Everybody is focused and glued to what is happening in the news. People are focused on the tariffs. That's probably what's going to be driving the market for a little bit here. Then once that starts to shake out, what are we looking for? Now we're going back to the chart to see what's happening. But as long as news continues to beat all, probably going to be wanting to make sure what is on the table, what is off the table as it relates to tariffs. And then as things start to ease there, now we're going to be getting really, really, really far into the charts. But Kevin, it's really tough to say. So what's the next level after this? So if I'm looking at the Fibonacci's, that 78 is obviously going to capture my attention. There's no doubt about it. That's something that's going to be on my mind. I can't help that. That also relates to that July peak. If you see back there, back in July of 22, yeah, also seems to form a little bit of a previous resistance. Now flip that around, that's potentially new support. So I would be imagining that a lot of traders out there really want to see some sort of support at 4,500. We'll call it around that area. If it doesn't hold that, yeah, sure. Maybe we go back to that October of 2022 low, which would be tough. I don't know what the percent drop on that would end up being, but I got to imagine that's somewhere more than a quarter of a percentage, 25% rather of a drop. Gosh, that is just
Let's see.
almost,
If we got down to the ledge there at 46, Jeff, according to my white line, we'd be looking at about 25%. You'd be right.
5.2, yeah.
And again, we get pullbacks, obviously, but we got to define what we're getting here. This is nothing like the standard market pullback, right? This is
Well said.
a little bit expedited by obviously the administration's current view and process. So we'll have plenty to keep an eye on. But I like what you said, Jeff, that unfortunately, as it relates to technicals, things that you and I talk about every single day, the truth of the matter is a lot of those technicals get thrown out when the narrative and news headlines are so pervasive the way that they are. So this is why it's becoming far more difficult for traders to handle, simply because the selling has been aggressive, and the technical breakdowns aren't providing what we normally would expect. So yes, it's a lot more difficult. And again, when we're seeing the significance of selling here, Jeff, I think it just reminds us, as one of the other things that I pointed out late last week, which was, if you're trying to define levels for your own comfort, okay, set those levels, say I'm comfortable down to this one, and then take it another aggressive move lower. What happens if the level that I set as support is exceeded by 10%? How am I going to be feeling? Because again, it's not, hopefully it doesn't go that way, right? But
right.
We traders need to be prepared for those types of moves, right? Because if we're not, that's how we start to get to an uncomfortable level of investment as we stare at just, falling markets. So very difficult to deal with. Try and understand true risk as best you can and link it to dollars, right? If dollars are what gives you the understanding of your comfort and real true risk, hopefully that's what you're doing. Now, Jeff, the last thing to look at is just the intraday chart. But unfortunately, man, we're not going to have any semblance of understanding of things here. That's a new low, 48.40 now on the SPX, through gapping S1, gapping S2, heading towards potentially S3 down there at around 4,700. Not a great development, but Jeff, initially, look, the first thing we got to do, we got to start climbing back, get some stairs to the upside, maybe over 49.20, and that our support one, which is now apt to act as resistance in the short run. Maybe that helps us out. Something to watch near term today, perhaps.
Yeah, love that intraday chart there, Kevin. Thanks for taking a look at that.
Yeah, not a great look, needless to say, everybody. Let's move on to our NASDAQ 100. It's going to be very similar, of course. We're off about 4.75%. I've already got a Fibonacci level drawn in here. Jeff, everything else that we've covered as it relates to the S&P still holds on the NDX here as well. I mean, three big reds to the downside over the last 3 days here.
Yeah, notice though, Kevin, the Fibonacci isn't holding as strong for the NASDAQ 100. So what might that tell me? Well, this might not be one of the stronger indicators for this particular index. Seem to hold pretty strong for the S&P 500, but it doesn't seem to have the same amount of conviction on the NASDAQ 100. So what might you do? Well, maybe you don't focus as much on the Fibonacci's for this particular chart. Maybe you start to look at, okay, do we have other support levels? Do we have other resistance levels that we can identify that have happened previously, and then use those as zones to try to give us an indication? Because Kevin, I don't know about you, when I'm looking at support and resistance, I want to see a bunch of hits. I want to see it 1, 2, 3, 4, 5 different times hitting off a support or resistance level. Gives me a little bit more conviction. Got it. All of us are looking at the exact same thing. Good. In this case, when you're looking at the Fibonacci, sure, there is a little bit of a zoning happening with that, but it's not quite as strong as on the S&P 500. So in this case, you might start to look at some other areas. Just going back to some highs, you've got the December high of 2023. It might be right at about that level right now. It could be towards the December low of 2023 as well. So somewhere in that zone might be where people start to focus their attention. It's okay, is what I'm trying to get at, to draw away from consistently using the Fibonacci sequence over and over and over again. It's okay to say, hey, the SMA 100 doesn't seem to be holding right here. Let me see if somebody is looking at something different. Maybe I'll add 200 or I'll add a 50. That could give a little bit more indication as to what might be happening, Kevin.
Not a bad point, Jeff. And unfortunately, at some point, the Fibonacci levels aren't going to matter, right? Because we're talking about Fibonacci's from a standpoint of, are we able to maintain the longer range uptrend? That's one of the things the Fibonacci's are kind of utilized for by traders is, hey, we've made a move of X points to the upside. Now we've given back half to 2/3 of that move. Does that mean we can hold the trend we've been working with? And for a lot of traders, once we get under that 61.8% retracement, they start thinking, okay, maybe the trend we've been looking at, the point from which we started the Fibonacci line, is not the uptrend. The uptrend is no longer in place, perhaps. And that's the concern. Now, I like what you said, Jeff. Maybe we migrate over briefly to like the weekly look. This is significant here, Jeff. That's the 100-week moving average in light green. We closed below it on Friday in the index. Yes, we gapped lower again today, but I have got to point out, when we go back to the high that we saw after the COVID rally to when the COVID rally lost steam is like right there. So if I was just to snap a line at a few of those levels, I have to say it is kind of notable that it stopped right there, isn't it? That could very well be a short-term bottom. Way too early to know, but is it possible? Yes.
Yeah, absolutely. Let me answer a question too. I see this coming through. Somebody said, are we in a recession? A recession is technically going to be done by is it NBBO, or not National Best Bid and Offer, excuse me, the Congressional Budget Office, or forgive me, I don't know the acronym off the top. What's that?
I think you're right.
It's a government body. It's an official arbiter of recessions. So that's when a recession is technically called. Are we in a bear market? Maybe the better question. That's a 20% drop from your recent high. I think we just saw on the chart, if we're where I think we are, I do believe we're probably in a bear market as of today. So I don't believe we can say we're in a recession, but I do believe that today is probably the first day of a bear market. So just want to give a little clarity to that question.
Yeah, I think those definitions probably hold less water these days than they used to, right? 10% from the highs, people call that a correction. 20%, supposedly, that's our bear market. And reality is that we could certainly be in bear market conditions regardless of how far off the peaks we have moved. But it is a comfortable way for some traders. I just don't know that I hang my hat on that nearly as much. So, of course, yeah, really rough here on the NASDAQ too. We're going to continue to try and set some levels. We're going to continue to see if we can't get some bounces. It is notable that on the NASDAQ here, our intraday low is currently set. Now, one thing we could do, Jeff, and we didn't do this on the S&P, but what if we were to try and define a level for a bounce? And again, I'm not doing this because I expect it, everybody. We're just trying to give you all something to be thoughtful of. We could use the Fibonacci's from the peak to today's low, and we could use that as a way to gauge just how much a relief bounce could give us if we were going to call it a relief bounce rather than a reversal, Jeff. Can I draw a Fibonacci like that from the peak and maybe speak to some of these thoughts?
Let's try it. Let's see what happens.
All right, so we're going to go from the 22,222 ledge down to what we just hit. And Jeff, some notable levels here now, right?
Yep. There we go. Got that 23, 30. Gosh, funny how that you move the Fibonacci around enough and you're going to start seeing some things correlate. So be careful about doing the fitting of the data, everybody. But I think that was a really good insight that you just provided and started off for us, Kevin. Please keep going.
So my thought is this, Jeff. we are gonna get a bounce, right? We know that that's the way the market works. There will be a bounce at some time. Way too early to know if that's today, right? So we are unclear. But one of the things that I've been speaking to for the last week and a half, 2 weeks is, remember, don't allow short-term price movements to change your long-term sentiment or your intermediate-term sentiment. Things have changed as it relates to our market. Can we get a bounce? Absolutely. Let's not look for the deep V-shaped type bounce, though, Jeff. We could get a bounce initially that is a speedy bounce, but the caution I have to give is when you see the move we're talking, Jeff, if we got up to the 20-day moving average from where we are just right now at 16,800, let's say, if we got to the 20-day, Jeff, we're looking at about a 13% rally, sir.
Yeah.
That's going to feel great for 2-3 days it takes to get us there. But don't be lulled into a false sense of security should we get such a bounce, right?
Yeah, absolutely. A really good call out too. Shout out to the viewer. It's the National Bureau of Economic Research. Love that. Also got Mike chiming in and making that happen too. Our viewers are so intelligent. I love that. So if I don't know it, I assure you one of the viewers is about to get it for us. But this is a really good call out, Kevin, too, because of what I mentioned earlier. You're going to see if we start to bottom out in most cases on these deep V drops down, you have that bounce back up. So you kind of have to be ready, strike while the iron is hot, but do be careful about false indicators. Don't just try and jump in and say, oh, I think today's going to be that big 5% or 7% increase. You never know. Just be ready, have your plan in place. As they always say, Kevin, plan your trade your plan.
You sound like you and I have been doing this show together for a while.
Maybe a couple years, who knows?
I love hearing that. Plan your trade your plan. It's a process that many of us are behind. We think that thinking your trade through and being prepared for the best and worst case scenarios is a good way to make decisions on the fly because you've seen those decisions already, right? You already gave yourself the roadmap to your successful trade. That's why planning can be helpful. So,
hey, Kevin, quick question for you. Yeah. One of the things I've seen, and this is something that I think is probably going to get attention now in the coming weeks, dead cat bounce. How do we know if we may or may not be seeing a dead cat bounce? Are there things that somebody could look at or indications to watch out for? Any insights on that?
Yeah, I'm going to harken back to what we just covered on the Fibonacci's, Jeff. We need a higher high. We have are lower lows and lower highs. So we have a legit downtrend off the peak. We could draw it in like so to give you something to think about, everybody. But you can see if you don't at least trade above this downtrending white line, you've got nothing but a downtrend continuation pattern. So you have to trade above the white line at least to be thinking that the downtrend might be broken. And Jeff, you can see in order for that to happen, over the course of the next, let's say let's say this week, we still got to get upwards to over 18,000, maybe even 18.5, just as an estimation of what we need out of the market here, out of the NASDAQ specifically. It's going to take some work. You're going to get on one of these days when we get short covering from those that have been short this entire time and very happy with their process. They're going to look to cover and they're going to be profiting on their covering, but it's also going to lead to maybe a more percentage-based bounce than you would have expected. So again, caution, right? I think for a lot of traders, Jeff, it's probably the 20-day moving average. We go back to the last time we were above it. We had 2 closes above it. Day 3, we were below it. So the Horner rule may have kept you out of it there if you were defining your confirmation as 3 closes over resistance. Maybe look for something like that. 3 consecutive closes, maybe be even more defensive, Jeff. Maybe we're looking for 4 closes or 5 closes because we need more confirmation from price. It's going to be difficult on any bounce to have the guts, I would say, to play the upside, isn't it?
Oh, absolutely. Especially with this going on, because you know how many false starts we have as traders and as investors over our lifetime. Now's the time to get in. Market's more than happy to remind me, no, it may not be the time to get in just yet, Jeffrey. So you do have to be a little bit resilient when it comes to that. You also got to make sure you're kind of following that plan, as we mentioned before. I know it can be tough. Be careful too. I just want to give a shout out right now. If you don't have a plan in place, if you decide to start one today, that's fine. check your emotions.
Yep.
Be very careful about developing a plan on a day where you are emotionally driven. You want to have a clear head as you're putting together this financial plan or this trade plan. So make sure that if you're going to do that, good job, but also you got to remove those emotions from the experience. Sometimes that means turning off your computer, not looking at what's happening in the market as you're going through that process. Just want to share that real quick, Kevin.
You're right. And we've talked about that. Just last Friday, I was asking people how they were handling Thursday, what they were thinking about Friday. I had a lot of comments for Ben and me on Friday suggesting that they were doing that, shutting the monitor off, playing golf, taking a walk, getting some sunshine, just ignoring the short-term stuff and recognizing that in the short term, markets make moves like this. They're uncomfortable moves. Let's not overdo the short-term negativity, perhaps. Let's try to remain as ultimately positive as possible. But yeah, it's a difficult sled to say the least here, Jeff. Small caps getting beaten down too. We're not saying anything out of the norm here. Unfortunately, we've got that 50 crossing the 200 to the downside. The slide in small caps has been more precipitous. Now we're off of our short-term bottom intraday here in the small caps, Jeff. But it's going to be one of those rough rides on small caps if we cannot quit having the discussion around recessionary features and fear, right? I mean, that's the stuff that really weighs on small caps here.
Yeah, I don't want to belabor the point. You're exactly right. This is going to be very difficult for small caps. Small businesses are going to take a big hit, especially with reciprocal tariffs. So I don't want to go too far into the weeds on that. But yeah, I'm probably of the opinion, and I think most investors and traders are, the small caps usually lead us down and they usually lead us up. So if you're looking for an early indication, you might look to the Russell to see, okay, are things getting better in that space? And then possibly will that translate to something bigger like the S&P 500?
Could also do the same, Jeff, as it relates to the semis, because the semis were our leader to the upside, but heads up, the semis broke down long before everything else, dude. I mean, that's the thing that I got to remind us about. We've been talking about this sideways and all this consolidation and everything, but the reality is the semis peaked in July of last year, and the rest of the market was still making highs as of February, man. So what I'm thinking is maybe the semis were our canary in the coal mine long in advance of a tariff conversation, and we were overdue for a pullback in semis. Maybe the semiconductors is the area that's going to give us lift first, Jeff.
Sure. Yeah. So some really good indications that you might want to keep an eye on for all the viewers out there.
Let's see here. So we've got a wonderful candle developing today, a terrible open, of course, working our way back up. Initially, you've got a gap ledge here at around 37.75. Then you've got former support, potentially, now new resistance, potentially. And then we've got another level up above, which was very significant support that got broken with this most recent weekly move. And you can see we fell about 900 points. My goodness, Jeff, 900 from our former support down here. So, I think a lot of traders are going to start to consider maybe 43 as a bounce zone on the semiconductor index here. A little intriguing, though, Jeff. You're seeing that bounce. We're only off 0.5% here.
Yeah, something to keep in mind, too, as you're looking at this, you've got the RSI down there. So there's a couple of different indicators that all of us are looking at. Maybe we have 4 or 5 that we look at any point in time. Here you're seeing the RSI in oversold territory. Now, be careful for those of you that are new to the relative strength index. Just because you go oversold does not mean you're due to come right back up. You can be in oversold territory for a number of days, sometimes even a number of weeks before you start coming out of that zone and pulling back off of the bottom. So I just want to give a call out there. Be careful about saying, oh, okay, now we're in overbought territory, so we have to come back down. That's not absolutely true. Oh, we're in oversold territory, so now we must start coming back up. Most certainly not. Careful about watching these zones and saying, just because it happened really quick, then now tomorrow is going to be the day that things start to turn around. You can be in oversold territory for a lot longer than you might think if you're somebody that's new to this.
So appreciate that heads up, Jeff. I could not agree more, regardless of your oscillator, whether it's RSI, stochastics, it's MACD, etc. Overbought does not imply immediate bounce. Okay. Never get that comfort. And the opposite is the same. Oversold does not imply or an immediate bounce, or I said overbought a bounce. I meant overbought does not imply an immediate reversal or pullback. So try not to fall prey to that. I see we got a survey opportunity here. We would always appreciate your comments and ideas, everybody. If you don't mind, click that link. It'll open in a browser window right next to this one for you. And then you can, after the show, give us your thoughts if you'd like. You could also just give a score. It only takes 60 to 90 seconds or something like that. But we always value your comments and feedback there, everybody. Very helpful for us if you don't mind taking a moment to do that. Okay, Jeff. Let's look at the VIX here. The VIX is up 7%, but we have really spiked. This is significant because, generally speaking, it's spikes like this, Jeff, that tend to be fairly short-lived. If we go back 5 years and incorporate the COVID spikes, well, you know, Jeff, we can see we've been here before, but the reminder I have is inevitably these aren't long-lived cycles, are they?
Right. No, they're not. And you know what? There was a statistic I had read not long ago about when the VIX goes over, I think it's even 30. A majority of the time, if the VIX goes over 30, within 100 days, the S&P 500 is positive again. Is that going to happen? I have no idea. I don't know what the future is going to hold. But what that just tells you is that these capitulation events can generally happen fast, and then they can be overcome very fast. If you think about the crash of 1987, it took 1.5 years to get back up to where we were before. But if you go back to like the 70s, you go back to the 30s, we were in the Great Depression for 12 years. Cycles seem to be getting a little bit quicker. I don't know if that's going to happen or stay true. Certainly 2008, we weren't just in that for a year and a half, but that's something to keep in mind as you're looking at what's going on here. You could have a big spike in this fear index, and then things shake out. Tariffs come to a relief, and now everybody says, okay, game on again, let's have some fun, and you start to see a bull market transpire. So just because you're seeing this VIX spike up does not necessarily mean it's an elongated bear market. I just want to give that call out there, Kevin, because I have had a lot of family and friends starting to send me text messages. What's going on? Should I start running for the hills, burying my head in the sand? And I say, be careful. Things may get worse before they get better. But I'm not of the opinion that we are necessarily going to be having a very elongated experience. I think there's probably going to be some pressure on a few different administrations to get rid of what's going on right now. Just a thought.
Well, yeah, again, anytime we start speculating on narrative and headlines, I think we are in a fool's errand, unfortunately.
Yes,
so I'm not going to certainly not going to speculate on what the administration might do or choose to do here. They seem to be willing to stick to their guns. The question, I guess, perhaps beyond that is, hey, does somebody with more power say something here? And that more power could be the Fed. Believe it or not, there was an emergency Fed meeting. It's a closed door meeting today, as I understand it. I believe at 11:30 a.m. Eastern today. Now, you can speculate, but that would be, again, a bad decision. Don't speculate on what the Fed is doing or what they might do. Do not expect to see necessarily an emergency decision out of the Fed. But I can tell you that that is happening today. There is a meeting. We'll see what comes from that. Keep your eyes on headlines that could absolutely have an impact for us today. I did see semis go briefly green. Wanted to talk about a couple other things that we've noted here of late, just big moves. We saw a big move in oil. Oil got under 60 a barrel today, a significant development. Now, that is very uncommon. Note the level that from which we have fallen now. The ledge at 66, 67 was very important, Jeff. I think a lot of traders are going to call that potentially resistance on any bounce.
Yeah, really tough too to look at the oil market. And then you're also, I don't know about all of you, but I spend a lot of time in California. You look at gas prices and you go like, when do we see this start to come into effect at the pump? But yeah, when you're looking at what's happening with oil, keep in mind you do have OPEC. OPEC is very much one of those entities that's in a lot of control of what happens in the oil market. Keep an eye out for announcements coming from OPEC. That could shift the narrative on what's happening in this chart. But look at that overall, Kevin, nicely drawn, by the way. You notice how it's been downtrend, 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 downtrend. If you see, generally speaking, an economy in trouble, oil is going to get cheaper. There is less demand for travel. There is less demand for goods and services. That puts more pressure on the price of oil. So what are we also looking for with oil? Kevin, coming back to the idea, probably headline news might be what is needed to try and pump this thing back up into a potential bull movement.
work to be done, sir, right?
Yeah.
Lots of work to be
Yes,
done.
sir.
Let's also get Bitcoin. Bitcoin is more of a proxy these days for the risk on, risk off discussion. You can see this weekend, it got very weak very quickly. A notable level to which it fell, though, once more, Jeff, if I make this a 2-year chart, I think this is going to stand out. There we go. We can see the green line, right? We had talked about breaking out of this pattern, right? This kind of sideways action that was lengthy in nature. We peaked in March of March of 24. We peaked there, and then we basically didn't break until November of the same year. So we went sideways for about 7-8 months and then busted out of it, and now we have round tripped it. Jeff, any shock to you that we broke resistance, rallied, came back and tested former resistance as potential support?
It's not, because of what you have pointed out on the chart. That double top right there, I think you probably nailed this as it was happening real time. So I'll have to go back and watch that show. But look at that double top, boom, comes back down, almost like a W pattern as well, you could call that. But you've got that double top and then that pullback. So as you're looking at what do we think it's going to drop to, you just kind of do what you did here, Kevin. You take your breakout point up to the peak, then bring it back down going the other direction, which is exactly what has happened in this circumstance. Keep an eye on too. Notice it's holding on to that. I believe that in blue is that the 200-day simple moving average.
Yep, that's right.
Okay, all right. So that's a level I think the market is probably going to be paying attention to over the next couple of days. Do we hold that? Do we not hold that? Hopefully, if it doesn't hold that, for those of you that are bullish on Bitcoin, you do find a little bit of support really close, right next to that green line. But that 70,000 level may be getting a lot of attention from a bunch of traders right now.
Yeah, that would make sense to me as well, Jeff. I wanted to, as we continue our discussion, just answer a few things in the queue here. Yes, as Mike confirmed for me, thank you, Mike. We did get to the Fed Reserve website, and you can see that there is a closed door emergency meeting scheduled for today. Again, I'm going to offer caution. Do not expect anything from the Fed today. I would still be surprised if there was any emergency decision out of the Fed today. I don't think that's what's coming here. So I just wanted to point that out. Additionally, we had some questions about why some of these stocks are maybe up today. I'll remind you that we went from a relative strength basis, Jeff. We like to see stocks that are leading on horrible days. It tells us quite a bit, especially in the midst of trying to understand, are we in the same market we were 4 months ago, or have things shifted so dynamically that now leadership could be coming from staples type of companies, defensive instead of heavy and tech? And so the one that people are asking about this morning is Dollar Tree. I'm going to bring it up for two reasons. One, it's in that space of retail that some traders and investors would tell you is a little bit more likely to be able to weather the recessionary storm. Lower prices might drive more traffic, but today Dollar Tree was also upgraded by Citigroup to buy from neutral. New price target at 103, a significant improvement, by the way, 103 up from 76. Now, that's a significant development. And Jeff, as far as the chart's concerned, it sure looks like quite a bit of bottoming action over the last 6+ months, doesn't it?
Yeah, really good call. You got that beautiful sideways trend fighting itself down in the bottom. You keep hitting off that 60 level, 60 hold, 60 hold, 60 hold. Now you've got the upgrade. That's a helper. But like you've talked about throughout the show, it doesn't necessarily mean you've got a breakout candidate just yet. You're going to need to get past that probably 78-ish level. Call that the 200-day simple moving average in blue, before I think people are saying, okay, now we've got a new bull trend. But if you're somebody that's interested in getting a little bit early, maybe taking a toe dip, taking a small percentage of the overall position you want, might not be a bad time to start taking a look at what's happening with Dollar Tree. What did they do back maybe in 2008? See what happened during 2020. Take a look at their history. As Mark Twain said, history doesn't always repeat itself, but it often rhymes. I think it's a good thing when you look back and see what exactly did they do the last time we were in a situation similar to this.
Man, that one is like a warm, cozy blanket for me. History doesn't repeat, but it often rhymes.
Right.
I just love the sound of that. Great call out. Yeah. As Zinc is pointing out, I drew in the RSI bullish divergence. We hit that low on Friday at the open and rallied off of it. It's the same low we were at a month ago. And you can see the RSI looks quite a bit different That is an improvement. That is a bullish divergence. Now, whether that portends a breakout or not remains to be seen. So a close over 80 or 78, the 200-day moving average, that would be a development people want to see. But Dollar Tree's not alone, Jeff. Dollar General also got an upgrade today from Citigroup. Another one with impressive relative strength and relative outperformance of late. They were also upgraded by Citi analysts to neutral, formerly at sell. New target here was 69, now up to 101. So again, another one with potential upside. And I'll just remind us, of course, we know that price targets are never guarantees to be achieved. Anything you'd like to share on DG here, Jeff?
Well, this is a good study too, as folks are looking at companies they might want to buy with the market pulling back. Why is Dollar General different from Dollar Tree? Now, this is a good area where you could say, well, let me look at the financials. Let me look at what's happening in their financials. Does one have a better cash flow narrative? Does one have a better earnings narrative? It seems that Dollar General is a little bit ahead of Dollar Tree as far as the chart. I would imagine that's potentially because they have a better financial position. So when you're looking at new candidates that you want to buy, as you're starting to see the market start to bottom eventually, what we can do is we could say, okay, let's say I want to buy a car company. Do I want to buy Ford? Do I want to buy General Motors? Do I want to buy Stellantis? So on and so forth. It's okay to start digging into those financial statements and seeing where exactly are people pulling this narrative from. And I think this is a really good call out here, Kevin. Excellent job.
Thanks, man. I got one more for you. How about Five Below in the same space? Another one with these low dollar retailers showing improvement in terms of at least what analysts are expecting. JP Morgan upgrading Five Below to neutral from underweight. New target here at 57. That's a below our current market value, unfortunately, but I thought I'd bring it up again because it's the same space. So you can see what analysts are thinking about here, Jeff, can't you?
Yeah, absolutely. Another one to keep an eye on, and not to jump to the chart, but go back to 2008, AutoZone got a lot of love because people said, well, I'm not going to be buying a new car. I might be starting to look at fixing my older car. So a lot of good opportunities out there. Remember to take your time, everybody.
Absolutely. Now, Jeff, I'm going to do this very quickly because we've only got a couple of minutes left. I'm going to show you a few other stocks, but these are downgrades today. UBS downgrading United Airlines to neutral, formerly at buy. New target, this is gross, unfortunately, formerly 107, now down to 59, where it's trading at. Delta Airlines also downgraded by UBS to neutral from buy. New target at $42. Not great. The big one on the deck today that was downgraded was Goldman by Morgan Stanley. This seems like, I'm always, I hate to see banks downgrading other banks. It just seems like cannibalism of some sort. But Morgan Stanley downgrading Goldman to equal weight from overweight. New target at 558, down about 100 points from 659. So wanted to get those out. But Jeff, we have flipped the market. The S&P is up 8%.
Hey, look at that.
Clearly, you and I have had the proper conversation topics today, right? Because the market was waiting for you and me. So here we are.
I had no idea.
Big pop. Jeff, we're staring at that purple line. That's our pivot point for the day. Does present as a potential rejection zone. Patience should be in the offing, Jeff. What other words of wisdom would you like to end with today?
Just be safe out there, everybody. Be calm. Stay focused on your plan. Stay focused on your long-term goals. And as Kevin mentioned a little bit earlier in the show, if you need to, get up from your computer, go for a walk around the block. Hopefully it's a nice day outside and a beautiful spring weather, but take a break. Sometimes it takes just 10, 15 minutes sitting away from what's happening in front of you. Do some breathing exercises, just kind of get back to neutral. And then once you're feeling relaxed, rested, and ready, come back emotion-free, and then start to make your next moves, Kevin.
I love that comment, emotion-free. Breathe, set some ideas, set some levels, know how you want to act. You guys know that we can, this is what we talk about. And I'm hopeful that if nothing else, the takeaway should be, hey, these guys have been talking about this stuff for a while. Hopefully helping to position us for the potential for these moves. Nobody necessarily knew that we were going to drop the levels that we have witnessed and participated in, but I hope that our discussion topics and encouragement to bring you all to a level of comfort, levels that really give you the comfort to stay with the positions you want to stay with. It's a difficult thing to do, especially in these instances. This type of move for many of you is something you've not yet seen. For Jeff and myself, unfortunately, it's something we have seen. We've lived through it. It makes it a little easier the more frequently or the more times you've dealt with this level of volatility. It certainly makes it easier. Doesn't make it easy, but easier is what I should say. So, Jeff, as always, love having you on, man. A really great conversation today, and I love so much of the insights and commentary you shared today. Thank you so much for being here with me today, man. Made it a lot easier.
Always a pleasure. Thank you very much for having me, Kevin.
My pleasure. Thanks again, and thanks to all of you. Big thanks to Mike Fairborn in the chat. You can follow the two of us on X, of course. We've got a survey opportunity in the chat as well. Would really value your thoughts, your opinions, and insights. Tell us what else you would like to see on Trader Talk. That would help us out immensely, everybody. So thanks for being here. Try and have a positive, fantastic Monday. Follow us on X and hit that thumbs up button down below if you don't mind. If you enjoyed today's discussion, we'd greatly appreciate that as well. Have a great Monday. Look forward to seeing you all again real soon.